Hello, this is Dave, and welcome to Equity Story. I'm here with the Wolf, and both dressed in sort of khaki, ready for war. What?
Pretty much like
Yeah,
Zelensky type gear, isn't it?
yeah. We've had a bit of a war session at the moment going through these stocks. But listen, this is just a general share advice and not personal. Wolf, firstly, Newcrest, because obviously we've got as a trend. The gold price starting to sort of ease a little bit. Now, I said to you earlier, the takeovers at 27. Why is why is Newcrest coming down? And you said, Dave, because it's a script offer, and there you've got NEM, really looking quite weak, with maybe the gold price starting to falter a little bit, and possibly this could come back down. This could come back down 14%, which affects the takeover offer of NCM, right? So. Don't be greedy. Take a profit. Simple as.
Yeah, I think so. I think now when you see the gold price not quite recovering, and I think I said on Monday, maybe just wait till the end of the week, but there's a danger that Newmont comes back and you're going to get back to the $23 where you started with. So you might as well just take a profit now.
Take a profit, and I think that's, since we put that on, that's a pretty good 35-40% profit.
Yeah.
So NCM is take a profit time, which is great. Now, IKE.
Yes.
So had a like sort of nice little buy signal a few weeks ago, and bang, up it goes, the dollar. What's going on here, Mr. Wolf?
Look, it's a good result. I mean, the company has been on a roll for the last few weeks, months, and you can obviously see what's been happening share price wise. So you've got the highlights from I think they're called update for performance for the third quarter 2023, and year-to-date revenue of 23.3 million. Dave, that is a huge jump of 134% on a previous corresponding period. So they're obviously doing something right. As a result, the market's really getting excited about this company. That's why it's almost at a buck. Now, I suppose the way you look at it is, can they keep going with it? Because that's the key now, right? Is there more in it? And I suppose when you look at it, you look at the outlook, and I'm just going to quickly read out something, couple of things for you. So quarter three was a continuation of a very strong first half, which is good. And we are executing on sizable sales opportunities to expect a healthy run rate of new contracts to close in the quarter four FY23 period and beyond. So it's a positive outlook, right? From the company itself. So overall, if you're sitting in this, I'd still be comfortable, probably playing the trade, where this update does not give me a reason to sell. So that's how I'd look at it. However, of course, if you're trading, you'd obviously be looking at your technical. So I'll leave that to you. But the actual announcement and the fundamentals of this does not give me any reason to actually sell. In fact, you'd be thinking to yourself, this is very good. I might keep this for longer.
Okay. And would you buy it? Would you buy this sort of news?
It's a good question. Maybe I'd probably have to do. I'll probably maybe even deeper dive into it just to see exactly how they're performing. Bottom line, that is, margin wise and everything like that. So you look, I probably have to leave it open for the moment. As a trade, I'd leave that to you again. Would you be buying it as a trade? But fundamentally, if I was in it, I'm probably holding just on the announcement. If I'm going to be buying it, I just need to see how much more there is in it, in a way.
Yeah, listen, it's just so lightly traded. That's the hard
thing.
It
is. That's the other problem, isn't it?
Yeah. But I think if you've got that long-term point of view, it's not too bad. It's I wouldn't be trading it. I think the time to buy that was really actually had a nice. The time to buy it was on Monday, really. That's a little breakout there. It's had that little bit of move up, but listen, definitely on the watch list, and Wolf, I think we'll be watching that pretty carefully.
And I'll do a bit more reading about it just to be more comfortable with the actual story itself.
I mean, I think if that's sort of a better chart by the end of the week, then we can buy it you could buy it on Friday. Yeah. Macquarie. So having a little bit of a run, heading back towards that, hopefully that $200, Wolfie.
Yeah, and the results today, I was really nervous, I have to say, because everyone, all the brokers saying, it's got to be weaker, it's not going to be as good. Dave, they're on pace on record full year results again. So that's why it's holding up today, right? It was a mix. To be fair, it was a mixed results today. The fund side or the management side wasn't brilliant. The commodity trading was fantastic. So there was a little bit of mixture in there. And also, interestingly enough, they've been eating into the big banks loan market share, which is quite interesting, right? So look, it's definitely still one of my favorite big stocks out there. And this result gives me confidence now to stay with it for the next 3-6 months. And we'll see how we go from there. Because like when you look at it, it's actually not expensive, pays a good dividend. So, record results coming up. Happy to see it.
Okay, perfect. KFM, Wolfie, which is Kingfisher, really poor price action today. What's going on?
Yeah, look, this is one that sort of popped up on our radar when they come up with some rare earths results, and they look pretty good, right? But I think today, when I quickly clicked through it, I thought results are good, but very thin, right? And this is the problem. The thinness, I thought, oh my God, I think it's probably going to be negative today. And it's obviously proven to be. So you've got, 5 meters, 4 meters, 5 meters, 4 meters, 3 meters. The thickness is just not there. And then, you've got the best results at around 2-3%, 1.5%. If you're going to go on that result, you need way, way more than this to get the market excited. So I think that's what's happening here.
All right, Wolf, I want to talk about Ericsson, and I have to say a disclaimer here because I know obviously people on the board, and I put my brother in this stock, right? Now the only issue is it's very, very lightly traded. So to get in and out of this, you've really got to be a believer, and
have some patience.
And have some patience, but sort of another 100 million in contracts, so 56 million market cap, 300 million possibly in revenue. They've got 5 billion in the pipeline. There's a lot going on. So just again, obviously an interesting story. The only issue is getting in and out of this stock is it's very, very, very tightly held is very tough. So if you're going to buy it, it's I think you've got to be a real believer. HLS, Helios. It looks terrible on that chart. Wolf, my God.
It does, but you know what? I think there's a little bit of hope there, because look at it was actually down way much more during the week, right? So it was down almost at like 12 months lows. It bounced actually back quite nicely, and I think the investors were worried with this report, and it came out today. And while it was fall off a cliff for the revenues post-COVID, if you look at it, they were like from 500 million COVID revenues to about 80. Right, which is a massive loss of revenues, and of course going to hit the bottom line. But at least that's out of the way, right? And now we can go back to normality. And I think Sonic will probably have something similar to show. So yeah, look, very nervous, but it's actually not too bad. However, you probably would not be touching it. If you were going to be looking at this space over the long term, you'd probably be thinking Sonic is the better option here. However, if I'd say overall, you'd probably be looking at somewhere else altogether. Yeah,
definitely. Now, CTT, this is a story that is trending, but just struggling to get over that $2. That announcement, Wolf, is that good enough, do you think, to push this higher?
Do you think so, Dave? I mean, look at the numbers. Just bring up the announcement if you can for me, right? So when I don't quite, in love with the story, I have to say. You look at the first half and it's adjusted EBITDA. So you've got to take into account that they've obviously probably played with some numbers. The gross revenue, at least they probably can't do anything there, is up 57% versus corresponding period, right? You've got an adjusted EBITDA of 16.7, which is 8.9% margin. And you've got an NPAT of 8 mil, right? So huge turnaround from the previous numbers, which were negative.
And these are like these obviously really expensive clothes.
Yeah, that's right. The upmarket type Gucci's type stuff, right?
And Wolf, yesterday we saw Nick Scali again have an unbelievable January. What?
And got hammered, didn't they?
Yeah, but the point is you know, I'll tell you why I want to talk about this, because I want to lead us into this RBA decision. Although they say that the retail numbers look down a little bit in January, right?
Yep.
You're not seeing this on the companies that are reporting on the ASX. They're generally speaking doing very well, aren't they?
Yeah, because they're only reporting to December. That's a bit here, right?
I agree, but
I'll tell you about what happened.
But that's my point. They're reporting to December, but
yes.
You know, what are you saying? That suddenly December everyone's spending money, and suddenly the 1st of January they go, oh, I'm not spending anymore. I don't. You know, you can't. You know, everyone's getting excited, going like, hey, guess what? They're not going to be raising much higher on just a few weeks of spending patterns. I don't believe that at all.
But it's strange, isn't it? It's strange. You know, for the numbers, retail numbers to turn around so suddenly from December to January, right? And when you look at these companies here, like Nick Scali, Cettire, and some others, obviously they had a pretty good last 6 months odd. But, you know, would you be scared with the retail numbers, whether they're coming through, that all of a sudden it's going to fall off a cliff for these companies? I don't know. This is just all confusing, isn't it? When you look at it.
I mean, you often say this could be as good as it gets for the short term. If you're right, the things are slowing down. Maybe this is as good as it gets with CTD.
Yeah, exactly. That's why I'm always wary trading retailers over the long term. I'm just going to go with a fly for, you know, a week, 2, 3, 4 weeks, and then probably take my profits.
It's just the wrong time for it, isn't it?
I think so, especially when, you know, RBA wants to slow down the spending. That's the whole idea.
All right. So we bring the inflation, and we're at record highs. But you're saying, Dave, you know, core inflation. There's been a few, you know, energy, sort of oils down. There's been a few sort of.
Some foods as well have come down, right?
Not that I've noticed, to be honest.
This is because you're a vegan. You eat the most expensive stuff ever.
Yeah, but I still anyway, but it's still record highs, and you still, you know, that it's got a lot to prove that inflation has slowed down. There's a lot
absolutely. I 100%. You know, we probably need to see way more numbers. However, you know.
And how do you slow down? Sorry, Wolf, you're an analyst, right? I'm a chartist, right? How do you slow down inflation significantly, right? If interest rates are still half where inflation is?
Look, I think what you're hoping for is, with time, right? People who have been spending, they'll get to a point, if the interest rates are high enough, when they see it's hitting them, impacting them on a daily basis. Because sometimes, you know, it takes 2 or 3 months before you start seeing an impact about, hang on a second, maybe we need to pull back slightly. It doesn't happen overnight, doesn't happen straight away. So it's a gradual process, and a lot of these indicators are lagging, right? This is why it's interesting to see more numbers come through, whether more inflationary type indicators are coming down, because so far we've only seen maybe fuel, a little bit of food, and maybe retail. So at least that's could potentially said. But like I said, I mean, I think the jury's still out, to be honest.
It's definitely out. It's definitely out, Wolf. And I get it that sometimes if inflation cools down, possibly some of the food prices could come down. But you know what? Whenever do you see a company, when it starts selling products at a higher price, think, oh, inflation's down, guess what? We'll reduce our margins, be kind. It tends to be the new norm, doesn't it?
Yeah, it does. People get used to it, right? But I think the other thing is that a lot of the economists are saying, and I think RBA is also counting on that, is that 2 years ago, when the interest rates are still pretty much zero, a quarter of mortgage holders have fixed the interest rate at pretty much 0%, and apparently a quarter of them are coming off this year from 0 to 5%, right, in the middle of the year. Potentially that could have a huge impact, right? So this is the where people are going to go, oh my God, you know, instead of paying $1,000 a week of my mortgage, I'm going to have to be paying $5,000. This is the potential problem here, right? Which I don't think we've quite understood how it's going to impact the whole picture here, because that's something that it's ahead of us still. We just don't know what it might have. Maybe people prepared for them, right? We don't know, but it's something that we still got to keep an eye on.
Right, interesting times. Wolf, listen, we've just got one sale on NCM. I apologize. We don't have any sort of buys today. I'll put IKE. If you're in Macquarie, you'll be holding it. And obviously, I think that's more or less it.
Yeah, I think you look. We've got an interest rate decision today, so I don't think you need to be a hero today. Just wait, and we'll see. Hopefully, there'll be maybe a trade tomorrow, or something will pop up. No doubt.
All right, thanks, Wolfie. Always brilliant. Thanks, champion. And tonight, live.
Yes, please join us. Very, very important.
All right, thanks, mate. Bye-bye.